Hey traders, Raghee here, and in this recap video we're going to circle through the indexes that I've got my eye on and what some of the longer term and intraday setups are. Now anytime I'm setting up the Asian session, my attention is going to be on the Nikkei first and foremost. And the weekly uptrend is very much intact. The daily uptrend is reorganizing, and I'm liking what we're seeing here. That brand new high keeps the spotlight on the uptrend. Now, the workhorse of any uptrend are actually the higher lows. That's the backbone, right? That's what keeps a trend intact, those higher lows. But the spotlight, the reason people keep their attention on a market, it's going to be those higher highs. So after a higher high, the next pullback we get to the 20-period simple moving average, to the 34 EMA on the high, is typically where I'm going to be focused on a buy. But in this case, because we're not seeing enough room for me to have a decent risk reward, what I'd like to see most aggressively, my entry is going to be somewhere around this 34 EMA on the high. Now I say somewhere around because of course moving averages are dynamic levels. They're not fixated, they're not static, they're not horizontal. So what I want to do is keep in mind that 19,930, 19,935 could be an interesting range for our level for another buy, but I will also keep in mind this zone here, what I call a pressing validity zone, right here down near the 34 EMA on the low. So this is going to be where I'd rather see the pullback occur, come back and test that correction that we saw here in the vicinity, as you can see, of about 19,820 to about 19,780. I'd like that buy a whole lot better, but that's the zone that I'm keeping in mind for a pullback continuation buy. You know what that does, and this is really important because one of the questions I get is, Raghee, will the Nikkei or whatever it is put in a brand new high? And this is where I can very confidently say that neither do I know or do I care. And what do I mean by that? It's not callousness, and I'm certainly not trying to skirt the question. It doesn't matter because my initial profit target is not going to depend on a brand new high for little old me. That is entirely too precious little snowflake for any trader. Remember, where the market's been before, we want to keep an eye on that. What it has done when it got there, we want to respect that. So if I get that buy that I want, my initial profit targets have got to be respecting where we've been before. And therefore, I'll look for a similar reaction when we get there again. And that gives me a decent risk-reward ratio, which I typically like seeing in the 2-to-1 area. What does that mean? I'm not manufacturing a 2-to-1. What that means is if I get in here, my validity takes me to the other side of the wave. If I get in here, my profit target takes me to this first level, then the second. Now notice the space. It's about 1-to-1 here, maybe a little bit better. Okay, but it gets to almost 2-to-1 up here on the second profit target. I will not take a trade with a less than 1-to-1 risk-reward ratio, and I will use previous support and resistance to determine the stop loss and the profit target for the trade. So that's the Nikkei right now. Let's take a look at the Nas. I got this question in the chat room, and I think this was a really good one to field, and I'm going to wrap up our conversation about my two favorite uptrends with the Nikkei and Nas. So somebody asked me, Rag, is the Nasdaq still in an uptrend? And this might sound crazy, but hear me out. No, it's not. But here's the mistake a lot of traders make. They believe that if a market isn't in an uptrend, well, it must be in a down. That's not true. Dow theory would teach us that there are 4 different types of market trends: markup, accumulation, markdown, and distribution. What I believe we are in right now is this one, the distribution sideways market trend. I'm just calling this 4 because it was the 4th one here. Okay, it's in a distribution market right now, which means, and you can see my notes here from the chat room, we have transitioned. I'm still bullish. Why? This is the huge part. Why am I still bullish? Because we must respect the trend that was, which means what I'm going to be looking for is opportunities to buy into an oversold support level. That's the key. So if we can trade down to these levels, even though, yes, it breaks the validity of the 34 EMA on the low, I'm not treating this as a trend anymore. That doesn't have the same bearing as it did before. And notice how many times we've been willing to see the market slice and dice through that level. It can't be a stop loss, right? So what I'll do instead is say, market, thanks very much for these breadcrumbs. Thanks for leaving clues as to where you'll go and what you'll do when you get there, and I'll buy into that zone. So yes, I am going to buy, but no, it's not a trend any longer. And the reason that's really important is as we get to the other side of this range, I'm going to be acutely aware of the fact that we could exhaust up here too. I'm not going to short unless I want to buy some puts, but I want to make sure that I take some profit off the table when I get up to this level. So we're stuck in a range, and this is more commonly known as a distribution market. Maybe it's not commonly known, but that is what it's called. All right, quick lap through the S&P. I thought I was going to wrap it up here, but let's take a look at the S&P real quick. This is still an uptrend, no blue grab candles, no break of the 34 EMA of the low, but I want everyone to be really cautious. The next level of entry I'll be looking for is around 24.20. Notice the upside resistance. Same conversation we had before. And the YM. Again, both the S&P and Dow were a little late to the uptrend party, but notice they're uptrending now. I want to buy pullbacks in both these markets. And that is your recap video with our 4 main indexes that we cover in the Simpler Futures chat room and site. All right, I'll catch you in the next update.